Good evening, everyone. This is Dr. Dan Melkarski with iFund Traders, and I would like to walk you through the trade of the day. It was a climactic decline buy on Apple going into the early part of lunch. So let's go ahead and take a look at this chart and walk through the trade of the day. You can see that at the end of the day yesterday, Apple had a pretty quiet consolidation period, and I have this line drawn on the chart showing you the lunchtime pivot low, and then it actually closed right around that same area. And then this morning we started with a big green bar, and there was no follow through to that. Now that's a very bullish looking bar, and you would have expected some follow through, and we didn't get it. So whenever we don't have follow through, we have that rule in place where anything that's expected to produce movement that does not, you almost look for the expected movement in the opposite direction. So you can see the first pullback into yesterday's consolidation, a little bounce, and then a secondary pullback, leaving those two bottoming tails slightly above yesterday's lunchtime and closing lows. Now, had this current bar as you see it had a trigger, meaning it traded over this high, it would have been an okay buy setup and maybe something I might have tried. Although I don't like that big hooking 8MA right over the top, but still you see two tails at support. Maybe you get a run back up towards that first tail. But the real support from yesterday's close, and remember, everybody who's watching stocks knows prior day's close. It's a huge area of support. So we'd actually expect if this doesn't bounce, if this doesn't trigger, we look for a move back towards the prior day's close. As we're waiting for the move to trigger, you're going to see that instead of getting the high taken out, we actually are going to break this bottoming tails low. And at that point, you would expect the move down to the prior day's close, which is where that support was based on yesterday's pivot and the prior day's closing price. So let's go ahead and walk this chart forward. And here you can see that when the bottoming tail failed, we got the move down into the support area. Now, this is the mistake that a lot of traders make. They view this right here as the climactic decline. Now, yes, there are more than 5 bars down, but they are not far away from the 20MA. This is not a trend that has accelerated. Okay, this is a move that has fallen into prior day's closing support. And although you have the 5 bars, this is merely an opportunity to possibly see a counter trend trade, but not due to a climactic decline. It would just merely be a bounce off prior day's close. If this current bar did have the high taken out, it would be a valid attempt at taking a long back up towards that 20MA. Now from here, if this bar fails, meaning there is no trade above this high, and instead the low actually gets taken out, you can see there really is no support to catch this thing until it gets to that red line, which is the 200 period moving average. That also coincides with the next whole number. Now, whole numbers have a little bit of natural support and resistance built into them, especially when they're being attacked by a distance that's far away. If they're consolidating along the whole number and then they break, they tend to run. But oftentimes you'll see them hold up near whole numbers and consolidate, or multiple bar moves into the whole number suddenly get stopped. So since this first bar we're looking at right here pretty much tested right near that 316 area, if that low gets taken out, the next whole number 315 is the same area as the 200 period moving average. And that's where I would expect the move to go. So at this point in time, I was watching and I was looking to see if we were going to get a green bar reversal off of this setup right here. Well, let's take a look and see what happened. Okay, so instead of getting a green bar reversing and taking out the high, the low gets taken out and the support fails, and you can see we fall right down towards the 200 period moving average, and we test the whole number support at 315. Now we have a true climatic decline. You can see we have 5 bars or more, and we have a nice separation from both MAs. The blue line being the 20MA, the green being the 8MA, and we are clearly separated by multiple bars. All right, if you look at that 8MA, we are a 5 full bar drop from the 8MA. So this is clearly the kind of separation we need to be considered climactic. The only thing we don't have is a increase in volume. Okay, it's not needed to have that. It makes these trades a little better. In this case, we don't have it, but we have the rest of the setup. And off of the 200 period moving average, you can see the move back up towards the prior support right around that 316.50 area or the declining MA. So this is the time when I was looking for the trade to trigger. Now sometimes I will bid at the support area. Being Apple's a little more expensive and it can move pretty violently when it gets going, I actually wanted to wait for confirmation. So I didn't take the aggressive entry on this trade. I was actually waiting for the trigger, which was going to be this current red bar reversing and turning green by itself, or closing red, and then the next bar takes out this high. So let's walk this bar through and see what we get. Okay, so here you can see that we had the red bar that had touched the 200, tested the whole number at 315, and it started to reverse and produce a little bit of green. Now normally this would be enough for me to take the trigger, and in this case I was waiting for just a little bit more. I wanted to see it take out at least 1/3 of that last red bar and also that 315.50, because just like the whole numbers, the quarters and the halves in between, 25s, 50s, 75, they become a little bit of a sometimes of a natural support or resistance. So over that 315.50 gives me 1/3 of the prior red bar, gives me a little bit more green as we're going to go forward. And that to me was going to be my trigger on this trade. Although right here, under normal circumstances with most stocks, this would be enough for me to go ahead and take an entry because the red bar erased and went green. And the other thing when you use that aggressive technique is the closer you are to the closing of the bar, meaning if it's a 5-minute bar and this happens in minute 4, it's a little easier to go ahead and get in early and bank on that follow through. If this is the first 30 seconds of the bar, you got 4 minutes left, anything could happen. It could rally a dollar up, it could erase this tail and crash red and break through the 200. So waiting for a little bit more of a move, take out a little bit more red, and then get through that 50 mark, that was going to be my trigger. So as we go forward, we'll see how this plays out. Okay, so right here, as you can see now, we have enough green to say we've erased the red and we're turning it into a forever bar. All right, so we call them in the class the forever bar, where we're going to get the move in the other direction and we've just marked the low. So right here is when I started looking to take the entries. And when I finish this with you, I'll pull up the trade log and you can see the entries and the timestamps right at 315.50. And what I'm looking for is a move back up towards where that prior support failed. So looking for about $1 going into lunch, and a little bit over a 50-cent stop. So about a 2-for-1 on the trade. So 316.50 or that declining 8 MA, that was kind of the target, and that was going to be the last trade for me in the morning, right before I take the lunch break. So this is what it looked like on the trigger. And the nice thing is when sometimes you get these triggers and then it immediately goes your way, and you got your move and you feel good about it. Sometimes you get your trigger, they jump around, they wiggle, and you just have to sit there and wait and see if you get stopped out, and then possibly take a second entry. So in this instance, this was what it looked like on the trigger, and this is what it looked like on the follow through. So it was a pretty comfortable trade after the trigger, immediately goes my way, nice big strong green bar, almost right back into that resistance. So going for that target of 316.50, felt like with that strong of a green bar should easily get the next bar to follow through. Put some orders out there, 40s and 50s, let them get taken out, and that's going to be the end of the trade. So let me go ahead and show you the next bar as we get to completion on this trade. Okay, so there it is. Wasn't much effort. It was pretty easy for the stock to bounce off that 200. Very nice follow through. Quick 2 bars, hit profitability, and went to lunch. Now, could have left some on and tried to go for the 20, but I did have a target in mind. I put the orders out ahead of time, did not want to be playing through lunch, didn't feel like waiting around. And, sometimes I'll tell the traders even, leave something on. If you hit your targets easily, put a trail stop in or leave something on. Now, when I'm going counter trend like that, MAs will always be a target. Prior lows that were support that failed become a target. So I hit 2 targets in the same area. And again, getting $1 out of the trade was enough. I finished off my morning. I hit my daily profit total, and that was it. I decided to take the trade off and go to lunch. All right, so it was a good 2-for-1 trade. And again, the climactic decline buy, the keys to this, multiple bar drops that accelerate at the end and create separation from your MAs. It's nice when they line up on some support as they accelerate, and if you get a volume surge. Now this one, we had everything except the volume surge. All right, so we had the multiple bar drops, more than 5 bars, clear separation from the 8 and the 20, and we accelerated as the first support area failed. So we got a nice hard surge down into the support area, and then I watch you through the trigger. Okay, so that's it for the trade of the day. Before I go, though, I do want to show you the trade log. I promised you I was going to show you that with a timestamp, so give me one sec here to pull it up. Okay, so you can see here's the trade log. 10:57 was the time. So that bar, that green bar that I bought into, was the 10:55 through 11 o'clock. It was that 5-minute bar, and you could see, tried to get right around that 50. And with Apple, it's really hard to get the exact number. There's a lot of slippage in there. It's a fast stock, so I got most of them at 49, one at 50, one at 48. Got the 1,000 shares filled, and then took it for the dollar, and called it a lunch. Okay. So that's it for the trade of the day review. I hope you learned a lot, and I look forward to seeing you next time at the next lesson. Take care, guys.